Good afternoon, an afternoon update of the U.S. stock market and bond market. I'm Rich Paz for Critical Points, 1:44 p.m. Eastern Time, October 25. All right, what we have is this morning the market was opened higher in line with the overnight futures higher, started to trace some as though they were going to fill the gap, and when it moved up, as if they panicked a little bit that, hey, this market might be firmer than we thought. This market might go up. And it did. And we had the NASDAQ composite go to a record high. We've got the NASDAQ 100 not to a record high, but getting closer. And the NASDAQ 100 I thought was going to have a problem at its 5-day average actually be down today. It went up, not only to go up, it went up a huge amount. It was a good run up, okay? That dragged the S&P 500 up, but the Dow Jones kept going lower. What's going on? Well, we also have the interest rates didn't really go down much at all into its bottom for today, and then rebounded. And for some reason, I didn't pay any attention, wanted to buy anyways. It was more of a stock market story. But now the interest rates are firm enough today that they're getting nervous about the interest rates once again. They're starting to sell the stocks back. In addition, we got some news of Germany made a statement that if the U.S. launches a trade war, which as far as I know, we're in a trade war, so they must mean escalate the trade war, they are going to retaliate. Now, they may be talking that if the U.S., maybe they're thinking if the U.S. goes after Germany, not necessarily the whole world or something. In other words, they're looking at their personal stance, and I'm not sure where we're at with that. Maybe we don't have a tariff problem with Germany, and that's why they're saying if they launch one, okay? Doesn't matter to me. As far as I'm concerned, we're already in a trade war around the world. It is primarily against China. The whole world is nervous about China overtaking everything. All right, but that kind of news sent a message of just what some people are warning about, that if Trump gets elected and does all this tariff stuff, it won't work. He's going to have a very, very difficult time, he and his gang, to actually get it done, because the other countries are going to do the same thing. They're going to fight right back at us. This is why this stuff has never really worked in the past. And we do want to keep in mind President Hoover in the 1920s, when we had such a great stock market and a great economy, and then it just fell apart overnight. We went into the Great Depression. We had the 1929 crash. Well, it was far too much private sector debt in the stock market, for one thing, made it way too high and way too vulnerable. Regulators warned about it, but they didn't do anything about it. And then it broke, okay? But we also had a lot of overexpansion in business, lots of money too, that also caused some issues. So here again, as I've been saying in recent days, our disasters are really created more by you and I, the consumer and business, not the government, all right? But the government couldn't react fast enough, didn't know what to do. Even the Fed Reserve, they didn't print fast enough money, so the depression became even worse at first, okay? And you can also see that throughout the 1800s, all right? If you're not going to print the money, then you're going to be in trouble, all right? If you got a disaster. Now, so that German comment, I think, helped ease this market down. All right, the market was up, 40 points or something here a while ago, and now it's almost fractionally lower. I think it's -3 on the day, and the NASDAQ was up 200. That's coming back, but the Dow Jones has been weak all day. Why? Well, I think you're still seeing people sell stocks across the board, but you got some who are playing games in those hottest big-name stocks. They're back to playing the upside in NVIDIA, Mag 7. Tesla helped with that, okay? They've had a big update. And Tesla, I said months ago, or a year ago, they were having a problem with a long-term business cycle. I just said it's going to take them a while to work through, but I'm not a stock picker and didn't know how to really time it. I haven't said much about it. In hindsight, we can look back saying, yeah, it finally did bottom, but Tesla was way behind the rest of the stock market and the economy. Today, yes, it looks a lot better, and they're in a long-term bull market. And I have not taken time to figure out, is it going to be over quickly, though, or does it have time? And I probably should, when I get a chance, take a look at that. But at any rate, I understand some of the news that got the market a little excited here and spiked it, and I think the market is kind of vulnerable. And when we look at those level 4 intra-week swings that sometimes are the major intraday swing, you can just see how fickle they are. They're hard, difficult. They slam them up and then they slam it down, or they do nothing for the next one. And we're just kind of chewing through here, trying to mark time going into the election, okay? Now, in terms of election polling, it looks like CNN might have stopped their polling now. It's their final one. They're just going to assess the news and prepare for the election. And it came in 47% Harris, 47% Trump. How do you like that one? Okay. Sad state of affairs that we can't get excited about a specific individual for president and get over 50%. You know, it's just amazing to me. And this has gone on for a long, long time. So as we plug all this news together, it looks like there is a chance interest rates are going to work higher into next week. I would think that's going to weigh on the market, and it seems to be working right now in the S&P 500, pulling it down. And I think Germany's comments does tell us that what I've been seeing over the last couple of weeks, and I think this will be the case right in the election, there's just more and more discussion around the world that Trump economic platform is going to be a disaster for the U.S. That's probably going to be a problem, if not a disaster, for various countries around the world. And they're just speaking up more and more, and most of it is that tariff stuff. If Trump could drop the tariffs thing, he might actually get a chance getting in there. At any rate, this idea of these level 4 swings straight up, and then they just erode and drift back or come straight down, as you look at those in that range over the past couple of weeks, that is even more like Wyckoff analysis called distribution. And the smart money or powerful money, they push the market higher and then they sell more than they bought on the way down. And what they're trying to do is get out of their positions before the market really falls apart. They're trying to sucker people into buying so they can turn around selling. Now, that was Wyckoff's thinking. The interesting thing is Wyckoff learned that even as a kid, working on the New York Stock Exchange, watching some of the people back in the late 1800s, early 1900s, some of them were crooks, okay, and abused people investing in Wall Street, and some of them not. But he learned that even when the regulations come in and really cleaned up things, he could still see these groups kind of doing that same kind of mentality, but now in a legal manner, and they're just trying to build position. Well, if you think about it, you can go back and look at Paul Tudor Jones' documentary back in the 1980s for the 1987 crash. Might have been early 90s when it was finally released, I can't remember. But you can watch him trade oil. He's trying to build a big downside bet on oil. He sold like 4 tankers of oil in a single day. But you watch how he's doing in the contracts. He sells like 400 or 500 contracts. Then he buys 100 or 200 back. Then he sells 300 or 400 contracts. Then he buys 200 or 300 back. And he was doing that all day long. By the end of the day, though, he had 4 tanker loads of oil sold. Okay, why was he doing that? Make sure nobody jumps on the same bandwagon with him. He was trying to confuse them if anybody was watching his orders somehow going into the exchange, which was a lot easier going back in time than it is today. And they now have computers doing that you don't have to hire a person to just do that kind of trading during the day to get you into a big position, out of a big position without upsetting a market. The darn computer can do that, okay? Play those kind of games. Buy, sell, buy, sell, buy, sell. But at the end of the day, you're actually a net seller. Well, this is what's going on in this range that I was a little concerned. It was looking rather positive here. And I look over to the NASDAQ, and maybe I still got it wrong. This market is just going to keep going higher because the NASDAQ did trigger a time stop saying it ought to go higher into December. Okay? The Dow Jones and S&P 500 have not done that. Okay? So which is wrong? Well, I'm going to go with the S&P 500. I think that's the more accurate one. I normally rank them as S&P 500, NASDAQ, and Dow Jones, okay? And they take turns, and we get clues from one another, which is why I like watching all 3 of them. But I talk primarily S&P 500. I'm concerned the S&P 500 is telling us it still wants to go lower next week. It wants to err on the side of not being bullish into the election, but I don't know how right we'll be. We may see a sudden slam up because that's how they do things. But if it comes right back again, I think we have to be concerned. This is net selling. It hasn't yet broken the dam yet to be a flood and scare people into selling. And it may not do that. Some of this really is just trying to play some games while they wait, okay? But you can see people are probably reducing their positions. Some may even be making bets, increasing positions as they prepare for the election. Any rate, bottom line is it does look like the interest rates might have it in the head to move a little higher. The stock market does seem to be a little sensitive to move lower, even though the NASDAQ had a great day today. I think we just got mixed currents here as these bulls and bears kind of battle it out. But I don't particularly care for the fact of running that S&P 500 up as well as they did today, and now it's all the way back down. That's a sign of weakness. I don't like it. I think there's probably going to be some drifting lower here over time. All right, that's all the news and some of the things going on here. It was a very interesting day so far, and I'll talk to you on Monday. Thank you.